How would you like to crack the code to your real estate success? Hi, I'm Mark McInerney, President and CEO of CodeMark Financial. Here, we teach realtors just like you how to become a mortgage money genius. Today, we're going to start talking about loan programs, most specifically FHA loan programs. And I've got a very special guest sitting right here who's going to tell you all about it. Sit back, relax. 3, 2, 1. Go.
Just wanna be your superstar, 'cause it's not where you are, it's where you are.
All right, thanks for joining us today, friend. So we've been taking you through everything on pre-qualified, pre-approved. We've talked about those little pieces inside of it, down payment, credit scores, income, and now we're going to start taking in all of the details of what all of that does. Where do we plug those pieces? We plug those pieces into loan programs. But today, I've got the very lovely Gemma McInerney. This is my oldest daughter, my oldest child, my only daughter, and she's going to tell us about FHA loans. Gemma, good morning.
Good morning.
How are you today?
Looking awesome.
Yeah, I would say that you are actually. Why are you here today? What happened? How come you're not at school?
Well, there has been some terrible rain this past, and it has been driving everything really crazy.
It sure has. And what, school was canceled?
Yes.
And in this case, as they say, when life feeds you lemons, you make
Lemonade.
Exactly. So we're making lemonade with the situation that we have, because otherwise it would be utter chaos at my house right now, similar to maybe some of the home buying experiences that your buyers might have had with other mortgage companies where it could be chaotic when they don't know the loan programs and to get pre-approved. But we're going to talk about those loan programs. So today we're going to talk about FHA loans. Now, FHA loans are typically, I would say, usually help buyers that don't fit into the conventional loan mold. Now, what would that actually be? Well, there's a different credit score tier. There's also a different down payment amount that is required and allowable for an FHA home buyer. And then, of course, they can afford more with their income because the debt-to-income ratio is allowed to be a little bit higher as well in an FHA loan program as well. So Gemma's going to tell you exactly what all that looks like. Gemma, can you tell them what is the minimum credit score needed for an FHA loan?
Actually, there is no credit score minimum.
That's right. There is no credit score minimum. However, most lenders are going to require some minimum credit score to exist. Gemma, do you know what that credit score is?
About a 550.
A lot of lenders will go below 600, below 580, and even as low as 550. Now, it's worth noting, guys, that the lower the credit score, the higher the interest rate. And also, the lower the credit score, the less options your buyer has for other loan programs. What does that mean? It can make it for a very challenging loan process. So that's worth noting. Now, let's talk about the down payment with FHA. Gemma, what is the minimum down payment for an FHA loan?
3.5%.
Now, this is where I was talking about it's a little bit different than a conventional loan. So a conventional loan typically requires about 5%. If you go back and listen to what we talked about in conventional loans, you know you can put down anywhere between 3 and 5%, but certain buyers only qualify for that 3% down. It's typically 5%. However, FHA gives the opportunity for that very minimum down, which is 3.5%, which is good, especially for home buyers that need a little assistance with that down payment portion. Now, the last piece is debt to income. On a debt to income ratio, someone with an FHA loan can go as high as how much of their debt to income ratio?
I think it's 50%.
Typically, it is about 50%. And yes, with some other stronger overcompensating pieces to the loan submission, a home buyer might even be able to move that line up into the sand as high as 55%. Again, a friendly reminder that on the conventional loan, in most cases, you can't go over 45%. So why is this worth mentioning? Well, on an FHA loan, a buyer perhaps with a softer credit score, maybe not as much money down, can still afford a little bit more home with what their current situation might look like for qualifying for that loan.
Usually a FHA loan helps out a lot of first-time home buyers.
Now, I'll have you consider something else. If she can do it, well, guess who else can? That's right, my friend. You. Take a look at this slide real quick, just for a brief recap of what all of this looks like. All right, we actually brought this down a little bit for my sidekick. You know, I want to point out, here, scoot over just a little bit. I want to point out that, yes, how old are you, Gemma?
8.
What grade are you in?
3rd grade.
So, yes, mortgages can be taught to anybody. And everybody, you know as well as I do, deserves the opportunity at home ownership. And my friend, you are already a great and superstar agent. Part of becoming even more of a superstar is to learn the game inside of Mortgage Money Genius so that you become a Mortgage Money Genius. You want to tell them, Gemma, please like, comment, and share.
Please like and comment and share, and peace out.
That's good enough for me. I'm Art McInerney. Thanks for joining us today.